Thank you for joining us today for the Just and Reasonable Program workshop. We recommend that you direct your specific questions related to your specific situation or case to our general inbox at lahd-rentadjustment@lacity.org. This email will be noted again at the end of the presentation. 11 ways to adjust rents. This is specifically for RSO properties. This is just a list of all the ways an owner may increase rent to be discussed today. Vacancy decontrol. Annual allowable rent increase. Additional tenant. Recovery of RSO registration fees from tenants. Recovery of SCEP fees from tenants. Smoke. Carbon monoxide detectors temporary rent surcharge. Capital Improvement Program temporary rent surcharge. Seismic retrofit work temporary rent surcharge. Rehabilitation work temporary rent surcharge. Primary renovation program permanent rent increase. And just and reasonable permanent rent increase. 6 allowable rent increases that do not require LAHD approval. Five rent adjustment programs that do require LAHD approval. There are multiple cost recovery programs, 3 with temporary surcharges and 2 with permanent rent increases. Temporary rent surcharge programs include capital improvement, seismic retrofit work, and rehabilitation work. Permanent rent increase programs include primary renovation work and just and reasonable rent adjustment. For more information, please visit our website. Just and reasonable, or J&R. J&R is a mechanism to obtain financial relief from rent increase restrictions. It requires a $25 application fee. You provide 2 IRS tax forms, Schedule E, Schedule C, or Form 8825 for the property, one for the base year and another for the current year, unless suffering an operating loss in the current year. Income and expense statements can be from a prior owner. Analysis is based upon the total number of units on the parcel. To determine whether you are eligible for a J&R increase, current year net income must be less than the base year's adjusted net income. LAHD approval is required. Rent increases based on a J&R application must be approved by a hearing officer and/or the RAC, Rent Adjustment Commission. Assumptions. The operating rental property is the business. Net operating income is the key to profitability. Net operating income received in May 1978 provided a just and reasonable return to the property owner. Increases allowed by the ordinance plus Proposition 13 tax savings maintain a profit level. Required base year documentation. IRS Form Schedule E, Schedule C, or Form 8825. Rent roll, list of all units, monthly rent, and total collected per unit. If 1977 is not your base year, then provide a clear and convincing detailed statement explaining the attempts made to retrieve the 1977 financial data, including dates and methods used. Required current year documentation. IRS Form Schedule E, Schedule C, or Form 8825. The rent roll, proof of all income, rent, parking, storage, etc., all expense, invoices, receipts, and proof of payment, utility bills and proof of payment, property tax statements and proof of payment, and insurance declaration page and proof of payment. Documentation for base and current year. Copy of IRS Schedule E, Schedule C, or Form 8825 for base and current year. Complete the J&R workbook tool names and addresses of each tenant to be affected by rent increase, proof of income, copies of all relevant invoices, proof of payment and receipts for current year, and base year if available. Complete rent schedule of the entire property for base and current year. Complete rent receipts required for current year. Property tax statements. Cover the full year of January through December. Profit and loss for base and current year. Form examples. Here's an example of the JNR workbook tool or spreadsheet. You'll need to enter all the required fields and reach out to your assigned case analyst if you have any additional questions. IRS Schedule E form, supplemental income and loss. This is for individuals. Schedule C form, profit or loss from business. IRS Form 8825, rental real estate income and expenses of a partnership or an S corporation. JNR calculations and process. Items not considered to calculate net operating income. Debt service, mortgage and interest payments. Any penalties, fines, or fees imposed by a governmental agency. Self-labor expenditures, unless able to meet reporting conditions imposed by the regulations. Costs already recaptured under RSO. Capital rental surcharges and RSO SCEP pass-throughs. Expenses or income must have incurred in base or current year only. Prepayments or late payments for different years are not allowed. And then any late fees. For example, if your current year is 2024, you cannot include 2023 invoices that were paid in January of 2024, or 2025 invoices that are prepaid in December of 2024. Common adjustments to applicants' numbers. Management expenses are limited to no more than 7% of gross income. Expenses for major repairs must be amortized over a period of 5 or 15 years depending on the nature of work. For example, plumbing, roofing, new electrical, etc. Painting and decorating expenses must be amortized over 5 years. Ineligible use of self-labor expense. And adjusted income for below market rentals. JNR application process. For help, call 213-928-9063 for questions and assistance. Submit your application for departmental review, including JNR workbook tool. Include all required documentation. Consult with your case analyst after analysis is complete to determine whether to pursue hearing officer approval. Hearing section notifies you and affected tenants of a hearing date. Obtain hearing officer or RAC approval in the case of appeal of increase. Provide 30 or 90-day notice to tenants depending on the amount of the increase. If amount of increase is less than 10% of current rent, you'll need to provide a 30-day notice. If amount of increase is greater than 10% of current rent, you'll need to provide a 90-day notice. For mobile home parks, see state law. This is an example of the JNR increase calculation matrix, which the applicant will complete prior to starting the application. This will give you a rough estimate of whether or not you might be eligible for a JNR increase. Case studies. Case study number 1. The applicant purchased a 3-unit property in 1976. Applicant applied for JNR in 2024. Owner provided a 1978 Schedule E, utility bills, and canceled checks. Owner provided a 2024 Schedule E, supporting bills and invoices, and proof of payment. Applicant requested an increase of $643.29 per unit per month. Owner had never passed through any of the annual allowable rent increase percentage adjustments. The price level adjustment here is 173%. This table shows base year 1978 versus current year 2024 and per applicant versus per LAHD findings. This case study shows that the current year is not at a net loss, but that the NOI for the current year is less than the base year, $10,089.04 versus $4,724.03. The base year is adjusted after computing the 173% inflation rate factor. The end result is a permanent rent increase of $633.86 instead of $643.29, and a supplemental surcharge of 97 cents based on capital improvement type expenses that were part of the J&R application packet and were not filed separately using the capital improvement program. Case study number 2. Applicant acquired a 2-unit property on June 11, 1998. Owner provided a 1999 Schedule E. Applicant initially requested an increase of $118.37 per unit per month and then submitted a revised application for $121.36. Owner did not submit any capital improvement expenses, they only submitted repair expenses. Owner only requested an increase for 1 of 2 units. Price level adjustment, 74%. Again, this table shows base year 1999 versus year 2024 and per applicant versus per LAHD findings. This case study shows that the current year is not at a net loss, but that the NOI for the current year is less than the base year after computing the 74% inflation rate factor. Adjusted base year NOI is now $8,483.91 versus current year at $5,571.27. The end result is a permanent rent increase of $121.36, which matches what the applicant had requested. How to calculate a rent increase. Base rent, $800. Primary renovation or J&R increase of $20. The subtotal is $820. Allowable rent increase, $820 times 3% is $24.60. Add that, and your maximum adjusted rent is $844.60. Temporary surcharges added to the total rent, a $4.44 RSO and SCEP fee, and a capital improvement temporary monthly surcharge of $55. The total rent due now is $904.04. Primary renovation and J&R increases add to the MAR, which is the maximum adjusted rent, while rent surcharges do not. This is our Just and Reasonable page on our website. On there, you'll find additional information, including the application and the RAC regulation governing the program. For more information on the RSO, you can contact us directly at the LAHD Rent Adjustment section by calling 213-928-9063 or emailing us at lahd-rentadjustment@lacity.org. For more general inquiries, you can call the LAHD General Hotline at 866-557-7368. To RSVP for future workshops, please call us at 213-928-9075 and sign up for our newsletter using the link below. Thank you for joining us today. This concludes the J&R workshop presentation.